Hi everyone, Ruben here. In this video I wanted to show you how I make my price projections and how I make my time projections. Okay, so this is the Euro USD. This is the 4-hour chart. Today is July 2nd, 2011. This is the weekend, so the market is closed, as you can see. Okay, so first of all, I look at the pattern, and what I see here is a 5-wave, what seems to be like a trend. And the reason that it seems to be like a trend is because this pattern is non-overlapping. Okay, so this is a 1, a 2, a 3, a 4, and a 5. Usually a trend ends in 5 waves. Next, what we have here is a counter move. It goes in the other direction. So I assume that this is a correction, and more specifically, this looks like a zigzag correction. Okay, an A, a B, and a C. Okay, if this is a correction, if I'm right about my assumption that this is a trend and this is the correction, then at the end of the correction, price should continue going down in the same direction of the trend. Okay, so my objective is to find out the end of the correction, to project the price, project the area that the correction will end. And more specifically, my objective is to find out the end of wave C, because a correction, a zigzag correction, goes in an A, B, and C. So at the end of wave C, it will be the end of the correction. Alright, so that's how I measure it. That's how I project, as far as time and as far as price, the end of a correction. First of all, I will want to make the Fibonacci retracement, the internal retracement. So I will measure from the beginning of the trend to the end of the trend, because all the Fibonacci retracement really is checking the percentage that the correction has retraced compared to the trend. If the trend made 100 pips going down and the retracement went back 78 pips, so it retraced 78%. So this is what this tool will help us check. So what we see here is that the trend went all the way down to here, and the retracement went back to just about 78.6%. Okay, which is a very, very likely zone for the correction to end. Next, I will want to check the correlation of wave A and wave C. And for this, I will use the price expansion tool, the Fibonacci expansion tool. So I will measure wave A all the way from the beginning of wave A to the end of wave A, and then I will take this to the end of wave B, because the end of wave B is the beginning of wave C, and I will want to see the correlation of wave A and wave C. And I see that at this very point, pretty much right at the 78.6, is the 127.2% of wave A, which is also a very likely target. So at this moment, at this place, there are already two different ways of measuring, of projecting the end of the correction, and they both add up right at this point. Okay, the next thing that I want to check is the Fibonacci, the external retracement. So I use the same tool that I used before, the Fibonacci retracement. The only thing is, instead of checking the internal, I want to check the external, which just simply mean what is the retracement of over 100%. In other words, I want to check the correlation of wave C to wave B. Okay, so for this, I will go from the beginning of wave B to the end of wave B, and I see that right here is 127.2%. So price went just by a little tiny bit over this price target, and this is a very, very likely price target for C, for C to be 127% of wave B. Okay, so right here we have already 3 different ways of measuring, of projecting the end of the correction, and they all add up right at this point. Okay, the next thing that I like to check is the Fibonacci fan. So for this, I just once again go from the beginning of the trend to the end of the trend, and this tool kind of combines both time and price, because the longer time that passes, also the projection changes. It is more dynamic, and the 88.9 ratio is a very likely target for corrections to end. Okay, so once again, it is right at this same area right here. It is not exact, but it is a zone. Okay, so what I will do is just mark this as a likely zone for the correction to end. Okay, it does not mean that the correction will for sure end here, but it is a very likely zone for the correction to end. Okay, and now let's clear up the chart just a little bit so it does not get that messy, and make a time projection. Okay, so as far as price, this is a very likely area right here. As far as time, what I want to check is two things. First, the time retracement, the correction compared to the trend. So for this, I use this tool, the Fibonacci time zone, or whatever it's called, and I will go from the beginning of the trend to the end of the trend. Right here the trend has begun, and right here it ended, and I see that not exactly here, but 3 bars. It is only 3 bars away from the 161.8% of the trend as far as time. Okay, so it took 161.8% longer for the correction than the trend as far as time. Okay, and this is another very likely target. Okay, so once again, this is another thing that we stack up on top of our price projection. The next thing that I want to check is the correlation of wave A and wave C, not only in price but also in time. Okay, so this is how I do it. I use the same tool, and right here is where wave A has begun, and right here is where wave A has ended, and it is this distance. Now I want to just drag it to the beginning of wave C, and I see that right here it is actually exactly the same amount of time that took for wave A to develop and for wave C to develop. So this is another very big indication that this is a good area, a good likely target. Okay, now once again, price might continue and go up a little bit, but I think that according to pattern, according to our price projection, and according to our time projection, we are at a very likely area, favorable area for the price to just turn. Okay, so this is the first video. The next video, I'm going to show you the multi-time frame oscillator strategy, okay, and how I use that in real time. Okay, so I see you on the next video.